Hi, and welcome to my channel, where I will be sharing my passion for personal finance and investing. I love researching income-generating stocks and ETFs, and on this channel, I will document my journey to building wealth and share everything I have learned along the way. Please remember this is not investment advice, and all investments carry risk. Always do your own research before making any financial decisions. I will be honest with you. When I was younger, I wanted to have a portfolio of properties, a consistent stream of income flowing into my account every month, a passive income that could even eventually replace my job. But the reality is, you need to have a lot of money to invest in property. Over time, I also realized the downsides of being a landlord. It is a lot of work, not just dealing with repairs, but dealing with people too. Managing agents, finding tenants, dealing with cleaning, taxes, the list goes on. No thank you. I found a better way to invest in real estate, and I was able to start without a large pot of cash. Let me introduce you to Real Estate Investment Trust, or REITs. While owning a property allows you to leverage the bank's money for a mortgage, that is, if you qualify, investing into REITs requires very little capital. Plus, with the monthly income reinvested back, this approach, at least in my opinion, outshines managing a property portfolio. Let me now tell you about one of the best and most reliable income stocks, Realty Income. Also known as the Monthly Dividend Company, this REIT has become a favorite among dividend investors, retirees, and anyone looking for consistent passive income. How does a real estate investment trust work? In short, it owns real estate, collects rent, and distributes it as income to shareholders. Some of the slides I will share with you now are taken from the Q4 investor presentation published on Realty Income website. I will leave a link in the description if you would like to go through it in more detail. Realty Income owns over 15,500 properties across the United States, United Kingdom, and a few other European countries. It works with over 1,700 clients and currently has an impressive 98.9% occupancy rate. Realty Income has an impressively diversified portfolio. Their top clients include some household names like 7-Eleven, Walgreens, B&Q, Wynn Resorts, FedEx, Asda, Sainsbury's, Tesco, CVS Pharmacy, MGM Resorts, Home Depot, Carrefour, LA Fitness, or Walmart. These tenants are large, stable companies that sign long-term leases. Many of these businesses provide essential services, meaning they are less receptive to economic downturns. That stability is a big reason why Realty Income has built such a strong reputation among dividend investors. 81.2% of their annualized base rent comes from the United States, 14.3% from the United Kingdom, and 4.5% from continental Europe. Their property type holdings are a bit concentrated in retail, which contributes to 79% of their base rent, and the remaining 21% coming from industrial, gaming, and other sectors. However, in my opinion, this is not a big concern, as even within the retail category there is quite a bit of diversification, as we can see from their top 10 industries. 11% of Realty Income's annualized base rent is coming from grocery stores, 9.6% from convenience stores, 6.4% from home improvement stores, 6.1% from dollar stores, 4.8% from quick service restaurants, 4.3% from health and fitness, drugstores, and automotive services, 3.8% from casual dining restaurants, and 3.6% from general merchandise. One of the reasons behind Realty Income's successful business is their triple net lease business model. Typically, there are three main types of costs a landlord incurs when renting out a building. They are property taxes, insurance, and maintenance. With a triple net lease, these costs are passed to the client, which reduces any operating and cash flow risks for Realty Income. All Realty Income has to do is to collect the rent. This makes the company's income very predictable. It is a great model, which helps deliver a stable dividend income to the shareholders. Lastly, it is also great to see their high occupancy stability through various market environments. Since the year 2000, Realty Income's median occupancy rate has been 98.3%, never dropping below 96.6%. In the last 5 years, the occupancy rate was consistently high at almost 99%. This is seriously impressive, as these figures are way above the industry benchmark of just 94.4%. It is clear why Realty Income is so popular among investors. Now, let's talk about the share price and dividends. Realty Income is not a growth stock, and the price is quite stable. Although there was an 11% increase over the last year, the total price appreciation over the last 5 years has been only 6.6%. However, nobody is investing into REIT businesses for growth, but rather the consistent monthly income in the form of dividends. The company has increased its dividend for over 30 consecutive years, making it a member of the dividend aristocrats. The dividend growth is not bad, with an average annual growth of 5.1% over the last 5 years. Given the fairly high dividend yield of 5% at the time of making this video, the long distribution history, and dividend safety, 5% annual dividend growth is, in my opinion, very attractive. On top of that, this dividend is distributed on a monthly basis, making it perfect for retirees and people who use it to cover some or all of their expenses. Budgeting is much easier when you get a regular cash flow every month, instead of waiting for 3 months for a dividend. Is Realty Income a good investment right now? Well, if you like the company, want to have some exposure to real estate, and value a predictable, growing cash flow over explosive growth and capital appreciation, then sure, Realty Income can make a lot of sense. One caveat is that its share price is currently on the higher side of its historical value. However, high-quality companies are not trading at a discounted value too often. Personally, I hold a small position in Realty Income in my portfolio, as I appreciate the stability, consistent dividend growth, exposure to real estate, and monthly income that it provides. Although I am not buying more at the current price, I am looking to build out this position over time. I would like to buy more shares if a price drops below $60, but I am conscious it might take some time before the share price drops to this level. This is just my opinion for my personal circumstances, so please don't take it as financial advice. What do you think about Realty Income? Do you own any? And how do you think it will perform over the next months and years? Let me know in the comments. Thank you for watching until the end. I hope you have enjoyed the video. If you have any questions, please put them in the comments section and I will do my best to answer them. See you next time.